There is a stock on the American market right now trading at $6.17. 6 months ago it was almost $16, and before that it was under $4. 3 massive swings in less than a year. And the reason for every single one of those swings is the same story. A story involving the Trump administration, $500 billion, Goldman Sachs, Citigroup, Bank of America, and a company that quietly sits behind 70% of every single home loan in America. I am not telling you the name yet, but by the end of this video you will know everything. The price, the catalyst, the analyst targets, the risks, and the exact date coming up in 16 days that could move this stock hard in either direction. Stay right there. What is up everyone, welcome back to the channel. Today I am covering one of the most unique and overlooked stories in the entire US stock market right now. This is not a tech stock. It is not a drone company. It is not a crypto play. This is something completely different. Something that most retail investors walk right past without realizing they can actually buy it for $6 right now on the OTC markets. I spent hours researching this for you today, so let us get straight into it. The name comes at the end. Let us go. Here is what this company does in plain English. Every time an American buys a house and takes out a mortgage from their bank, that bank usually does not hold that loan forever. It sells that loan to this company. This company bundles up thousands of those loans, puts a government guarantee on them, and sells them to large investors all around the world. This process is what keeps mortgage rates in America from being 15 or 20%. This company is the single biggest reason a 30-year fixed-rate mortgage even exists as a product in the United States. It holds over $4.3 trillion in assets. Google Finance calls it the largest company in America by total assets and the 5th largest company in the world by that same measure. It placed 50th on the Fortune Global 500 in 2025. It is the 17th most profitable company in the entire United States. And right now you can buy its common stock for $6.17. Here is why that is interesting. This company has been trapped under US government control since September 2008. That is 18 years. And the Trump administration is now actively trying to set it free. In March 2026, the Wall Street Journal reported that Trump officials were in talks to sell shares in this company back to public markets at a combined valuation of over $500 billion. Treasury Secretary Scott Bessent called it potentially the biggest deal, maybe the biggest deal in American history. That single news report sent the stock up 18% in a single day. Then came a Trump executive order directing the government agency that controls this company to consider lowering capital requirements to make privatization easier. Then came Wedbush Securities in May 2026 raising their price target on this stock from $1 to $11.50. That is a 1,050% increase in one upgrade. And Goldman Sachs, Citigroup, and Bank of America have all reportedly been in direct conversations with the White House about how to structure this deal. Now let me give you the numbers that matter right now as of July 13, 2026. The stock is trading at $6.17. The 52-week range has been $3.60 on the low end all the way up to $15.99 on the high end. The stock is currently sitting about 61% below its 52-week high. According to investing.com data from July 10, 2026, the average 12-month analyst price target is $10.50. That is 63.93% upside from today's price. The highest individual analyst target on this stock is $18. That is 191% upside from $6.17. 2 analysts currently rated a buy, 1 rates it a sell, giving an overall buy consensus. Simply Wall Street has published a fair value estimate of $10.25 and says the stock looks undervalued compared to its industry peers on a price-to-sales basis. And the next earnings report is coming on July 29, 2026. That is 16 days from today. That earnings report is going to be the next major near-term catalyst for this stock in either direction. Now the honest risk picture, because I always give you both sides. Risk number 1 is the 18-year curse. This company has been under government control since 2008, and every single administration before Trump has tried and failed to figure out what to do with it. BTIG downgraded this stock in June 2026 specifically because they said conservatorship release timing is still deeply uncertain. Risk number 2 is the housing market headwind. Mortgage rates are still running around 6.4%, which is keeping housing activity muted. Lower housing volume means lower business for a company built on processing mortgage loans. Risk number 3 is pure political risk. The privatization plan could stall, face legal challenges, or lose political momentum at any point. And risk number 4 is that the July 29th earnings report could disappoint if the housing slowdown is showing up in the quarterly numbers and send the stock lower right when attention is highest. Okay, here is the reveal. The company is Fannie Mae, ticker symbol FNMA. It trades on the OTC markets. Official name is Federal National Mortgage Association. Founded in 1938. Under government conservatorship since 2008. $4.3 trillion in assets. Current price $6.17. cents. Average analyst target $10.50. Highest target $18. Next earnings July 29, 2026. Trump administration actively pushing a $500 billion privatization deal with Goldman Sachs, Citigroup and Bank of America, all reportedly involved. Wedbush raised the price target 1,050% in a single call. The bull case is enormous. The risk is real. And the July 29th earnings report is the next moment of truth. That is Fannie Mae. That is FNMA. And now you know the whole story. Drop a comment right now. Are you bullish or bearish on FNMA going into the July 29th earnings? I read every single comment. Hit the like button if this video helped you. Subscribe for weekly penny stock deep dives every single week. See you in the next one. This video is for educational and entertainment purposes only. This is not financial advice. OTC stocks involve extreme risk and you could lose your entire investment. Always do your own research and consult a qualified financial professional before making any investment decisions.